We are moving back to the next one called as residential status. Now in the residential status, I don't have a policy to discuss the provisions. I only have a policy to discuss the chart. Chart is a little twisted in my book. You look it from your book. If you remember it from your head, you remember it from your head. Okay. The policy comes and says that if you are an individual, you have to check your residential status. Residential status check pandradhukku the best and the basic condition is to check for 182 days. If you are going to stay in India for more than 182 days, come to the right side. You will become a resident. If you are not staying for 182 days, you come to the left side. You come to the left side. In the left side, you have to check for 3 charts. Chart number 1 comes and says that you are an Indian citizen leaving India for employment, crew member of an Indian ship. If you satisfy those 2 conditions or any of those 2 conditions, you are now a non-resident directly because condition number 2 is ignored. Now you are in the second chart. The second chart comes and says you are an Indian citizen or a person of Indian origin. Hold. If you are an Indian citizen or a person of Indian origin will be that kind of person whose grandparents or parents are born in undivided India. If your parents or grandparents are born in undivided India, then you are a person of Indian origin. If that is not the case, question will come and tell you that you are an Indian citizen. If you are an Indian citizen or a person of Indian origin, I will come and ask you, tell me whether you are from outside India coming to India for a visit, or you are doing something else. If you tell me, no, Rahul, I am from outside India, I am coming to India on a visit, I will come and ask you, okay, now tell me what is your Indian income. I will come and ask you what is your Indian income. You will come and say me, Rahul, my Indian income is less than 15 lakhs. I say, okay, then you are a non-resident. You say, no, Rahul, my Indian income is more than 15 lakhs. I come and say, okay, now come and tell me, have you stayed in India for 120 days in the previous year and 365 in the last 4 previous years? If you tell me, yes, Rahul, I have done that, you directly become an RNOR. You don't satisfy that, you are now an NR. Rahul, you come and say, no, I am not from outside India visiting India. I am not satisfying any of those conditions. I will put you in a slab called as others. I will club you with another person called as foreign citizen. Add both of them. I will ask you one simple question. Tell me if your stay in India is 60 and 365 in the last 4. You satisfy that condition, you will become a resident. If you don't satisfy the condition, you will become a non-resident. Now here you have a resident. Right side you had a resident. Club both together. Ask for 2 conditions. Condition number 1 says you stay in India for less than 730 days in the last 7 years. Stay in India for less than 730 days in the last 7 years. Or you have been a non-resident in at least 9 out of the last 10 years. Rahul, you have to satisfy any one condition, you become RNOR. You satisfy none of the condition, you become ROR. At the same time, wherever you learnt about the non-residents, club all them together and check if you are an Indian citizen. If you say, yes, Rahul, I am an Indian citizen, then I'll ask you, tell me what your Indian income is. If you tell me my Indian income is more than 15 lakhs, I come and ask you, okay, tell me, are you not liable to tax in any other country? You say, yes, Rahul, I am not liable to tax in any other country. I'll come and say, okay, now you are a deemed resident. And because you are a deemed resident, income tax deems you as an RNOR. Did something go wrong? Did someone touch something? Okay. You become a deemed resident and you are an RNOR. You are an RNOR. With me till here? Yes, this is what the conditions are. Now, in all these conditions, income tax is coming and saying that, boss, whether you are staying in India or not will determine when you left and when you came back. The date of departure is considered in India. The date of arrival is also considered in India. The date of departure and the date of arrival both are considered in India. Yes, but at the same time, income tax is also coming and saying that, boss, when your date of departure and date of arrival are given to you, then you have to check for what is called as your crew member. You have to check for what is called as your crew member. If you come and tell me that, Rahul, if you are a crew member person, then in that case, whenever you are a crew member, you will come and tell me that the date of departure and the date of arrival will also become outside India. Because if you are a crew member leaving India, then in that case, the date of boarding the ship till the date of signing off from the ship is all considered outside India. Yes or no? Yes or no? At the same time, they are coming and saying, Rahul, how are you not liable to tax in India? Question will come and tell you that. They are coming and saying that, boss, if you are not liable to tax in India because of domicile, residency, this, that, and all that nonsense, doesn't matter. In your exam, they will come and tell you that you are not liable to tax in India. You directly come and treat them as a deemed RNOR. But please understand, deemed RNOR conditions only apply in case you are a non-resident first because of the above conditions. You cannot jump those conditions before you check for deemed RNOR. Okay. Don't come and say that Rahul, the question comes and says not liable to tax in India, therefore I directly take him as RNOR. There might be a possibility that the person would have been an ROR also. Yes or no? Yes, when that condition is getting satisfied, this condition cannot be checked on. Is that clear, everyone? Yes, keep this in mind. Keep this in mind. At the same time, they're coming and saying, what is an Indian income? Indian income is any kind of income which is of an RNOR. If you are an RNOR, what income would have been for you? That is called as an Indian income. That is what the rules come and say. Yes or no? Yes or no? This is what your provisions are for residential status of individuals. Any doubts? No. Next comes your individuals ke appuram HUF. Income tax comes and says if you are an HUF, I will come and check for your control and management. If your control and management is found wholly or partly in India, then it is resident. If I come and say no, Rahul, it is wholly outside India, then it is non-resident. If I find out that you are a resident of an HUF, I also have to split your HUF into ROR and RNOR. ROR and RNOR. Income tax comes and says if you want to split your HUF into ROR and RNOR, check for the Karta. Check for the Karta. Karta in the last 7 years has been for less than 730 days, HUF becomes RNOR. Karta in the last 9 out of 10 years has been non-resident, HUF becomes RNOR. HUF becomes RNOR. Please understand, Karta and HUF are independent people. They cannot be linked to each other. They cannot be linked to each other. You will not come and say that the HUF is resident, therefore Karta is also resident, or you will not come and say that HUF is non-resident, therefore Karta is also non-resident. There can be a possibility that both can be different people. Both can be different people. But at the same time, please understand, if they are identified as a resident, there is never a possibility that the Karta will be RNOR, but the HUF will be ROR. Not possible. Possible? Not possible. Not possible, because if the Karta is ROR, HUF is also ROR. If the Karta is RNOR, HUF is also RNOR. That is how the rule is. Residency kulla change aga mudiyadu. Ana resident non-resident change aglam. Resident non-resident change aglam. Let's see what I am talking about. The provisions are like this. The sums are like this. You will tell me what is happening for the Karta. You will tell me what is happening for the HUF. You will tell me what is happening for the Karta, what is happening for the HUF. I am coming and saying that the HUF C&M is foreign, which means HUF is a non-resident. I am coming and telling that the Karta is current year staying for 200 days. If the Karta in the current year is staying for 200 days, Karta has now become resident because he is satisfying more than 182 days. So therefore, Karta in the current year has become a resident. Because Karta has become a resident, Karta will now have to be split into ROR, RNOR. I am coming and telling boss, Karta has stayed in the last 7 years for 185 days, which means Karta in all 7 years has become more than 730. Since every year he is staying for 185, every year he would have been a resident. None of the two conditions satisfied, therefore Karta has become ROR. Did you notice? HUF has become non-resident, but Karta is ROR. Come to the next scenario. I am coming and saying HUF is foreign, which means HUF will become NR. I am saying Karta is 200 days in the current year, which means Karta is resident. But I am coming and telling in the last 7 years he has been there for only 100 days, which means last 7 years he was there for 700 days, less than 730 days, which means Karta has become possible, not possible? Possible. Can we go forward? Yes. Next we are coming and saying that the HUF is foreign, which means HUF has now become NR. The Karta is current year staying for only 59 days. If you are currently staying only for 59 days, there is no possibility for you to become an R, because minimum at least you need 60. Therefore, you are directly NR. Rahul, do I have to split between ROR and RNOR? Not required. Next forward, it comes and says HUF is foreign, which means HUF is NR. Karta is showing 59, which means Karta is NR. Rahul, in the earlier example, it was 185 days each. Now example, it is 100 days each. Does it make a difference? No, because NR ka Puerto Rico, it doesn't matter. NR ka Puerto Rico, it doesn't matter. Clear? Yes. Then I am coming and saying that Rahul, my HUF is India. What is my HUF? India. If my HUF is India, HUF now becomes R. HUF now becomes R. It will come. Yes. If your HUF is India, that means HUF becomes R. The moment HUF becomes R, now I have to split between ROR and RNOR. I don't know. So let's hold. I am going back to my Karta. My Karta is coming and telling that, sir, I have stayed in India for 200 days. If I am staying in India for 200 days, which means I am R. Now, if Karta is R, Karta has to be split into ROR, RNOR. I am looking at Karta. Karta is coming and telling me that last 7 years I was there for 185 days, which means Karta has now become ROR. The moment Karta has become ROR, HUF will automatically become. Can HUF come and become RNOR? Not possible. Then you are coming and saying, Rahul, HUF is India, which means HUF is R. Karta is also 200 days, so Karta is also R. But what is happening? Karta has now stayed in the last 7 years only for 100 days, which means Karta has now become RNOR. If the Karta has become RNOR, HF will also become RNOR. Hey, everyone is following? Yes. Notice, no? Whenever you are an R and the Karta is also R, there is no possibility that both can be interchanged. Both can be interchanged. Both will be RNOR equally or both will be ROR equally. That is what the policy is. Coming to the last one, they're coming and saying you are in India, therefore HF is R. HF is Karta is staying for 59 days, which means Karta has become NR. Karta has become NR. But the problem is now because Karta is NR, I now need to decide what happens to the HF. Now, can HF become NR because of this? No. HF still is R. HF still is R. I will assume that the Karta was R. I will assume that the Karta is R. If the Karta was R, what happens in the last 7 years? He has been there for 185 days, which means had he been in R, he would have been in ROR. HF will become ROR. HF will become ROR. Yes or no? Yes or no? Last scenario, I'm coming and saying, boss, HF is India, therefore HF is R. Karta is in 59 days, therefore Karta is NR. But I want to find what my HF is looking like. So therefore, I'm going back to the Karta. I'm saying, assume you are an R. Tell me what would have happened. He's coming and saying, Rahul, assume I would as an R. I was 100 days in the last 7 years, which means I would have been an RNOR, which means HF will become RNOR. RNOR. With me, everyone? Yes. This is what your resident status looks like when it comes to an HUF. HUF. If you are not an HUF, you are now a firm or an AOP or an BOI or an local authority or an AJP. They're coming and saying copy paste provisions of HUF. Copy paste provisions of HUF, which means I'm looking for control and management. If the control and management is wholly or partly in India, you become resident. If it is wholly outside India, you become non-resident. The moment you are at that position, you are no more going to check for your ROR and RNOR. Every resident is considered as ROR. Every resident is considered as ROR. ROR, RNOR split is there only for individual or HUF. Beyond that, everyone is ROR directly. Beyond that, everyone is ROR directly. Last person becomes your company. Now, when it comes to company, I told you when we did rates of taxes, you have two kinds of companies. One is domestic company, one is foreign company. Income tax comes and says foreign company is that company which is not a domestic company. Domestic company has been defined as a company which is an Indian company or a foreign company which is distributing dividends in India. Yes, any kind of Indian company or a foreign company distributing dividends in India. Rahul, what is an Indian company? Income tax comes and says if you're registered in India, you're an Indian company. What are you? If you're registered in India, you're an Indian company. Please understand, registered in India meaning you should have incorporated yourself in India also. Okay, foreign company registering in India does not make it an Indian company. I'm talking about a company which is incorporated in India and registered in Indian Companies Act. Therefore, it becomes an Indian company. Income tax comes and says that, boss, if you are a company, tell me what are you? Are you an Indian company? You say, yes, Rahul, I'm an Indian company. I'll come and say, okay, good, you're directly a resident. What are you? If you are an Indian company, I'm directly coming and calling you a resident. If you come and say, no, Rahul, I'm not an Indian company. I'm not an Indian company, which means you are either a foreign company or you are an domestic company distributing dividends. Or you are a domestic company distributing dividends. For those two people, I will find something called as poem. I will find something called as poem. Income tax comes and says that if your poem is in India, then it is resident. If the poem is outside India, then it is non-resident. Simple, straightforward case. Simple, straightforward case. Now, please understand, regardless of your residential status, your tax rate is determined based on your status of the company. Okay. Just because you become a non-resident domestic company does not mean that your tax rate becomes 40. No. Even if you are a non-resident domestic company, your rate still becomes 25 and 30. Even if you are a resident for the foreign company, also your tax rate is still 40. Your status does not decide your residential status. Your residential status does not decide your tax rate. They are independent scenarios. They are independent scenarios. We have a table against it. The table will come and say that regardless of what your status looks like, your tax rates will be 25 and 30 for domestic, 40 for foreign. You can be a domestic non-resident also. You can be a resident foreign also. You can be a resident foreign also. This is one very famous MCQ question which ICI comes and asks, where they come and say residential status is impacting your rates of taxes. Answer is no. No. Rates of taxes has no relevance to your income tax rates. It is only relevant in case you are a individual. Because in an individual, resident individual, 60 years becomes 3 lakhs. Yes. Firm Puerto Rico doesn't matter. Company Puerto Rico also does not matter. Clear, everyone? Yes. This is your end of your chapter called as residential status. With this completes your step number 2. With this completes your step number 2. Moving to the next step number 3. Step number 3 talks about determining whether the income is taxable or not. For this, we have to look at something called a scope of total income. Scope of total income. Income tax is coming and saying, boss, tell me what are you? Tell me what are you? Are you an ROR? Are you an RNOR? Or you are an NR? If you are an NR, Rahul, I will tax 4 incomes for you. I will tax 4 incomes for you. Income received in India, income accruing or arising in India, income deemed to receive in India, income deemed to accrue or arise in India. Rahul, I am not an NR, I am an RNOR. In that case, they are coming and saying, boss, take your NR incomes. Take your NR incomes, add one more item called as income accruing and arising outside India from a business controlled from India or profession set up in India. I am saying, no, Rahul, I am neither RNOR, I am neither NR, I am an ROR. Good for you, all income is taxable. All income is taxable, the global income becomes taxable for you. Please understand what is going to be taxed is your income and not a receipt. Which means if you are going to get the money from outside India and put it into your Indian bank account, it does not become taxable on remittance. It will not become taxable on remittance, it only becomes taxable on generation. Okay, so if the question comes and says that you had earned money last year and you transferred it to your bank account in India in the current year, income tax will say not taxable. Whether you are an ROR, whether you are an RNOR, whether you are an NR, it doesn't matter. It doesn't matter. But if the question comes and says that you earned income in the current year and in the current year itself you are transferring, in the current year itself you are transferring, then in that case you will come and say, Rahul, transfer பண்ணும்போது not tax, generate பண்ணும்போது பார்ப்போம். Generate பண்ணும்போது பார்ப்போம். Generate பண்ணும்போது ROR க்கு tax ஆயிடும். NR க்கு பொறுத்த வரைக்கும் you have to check whether it is falling within the 4. You have to fall within the 4. Clear, not clear? Yes, be extremely careful about this. At the same time, if you have taxed something on receipt basis, you will not tax it on accrual basis. If you have taxed something on accrual basis, you will not tax it on receipt basis. Look at the scenarios. Tell me whether which income is taxable for which person. Okay, you have income received in India. Taxable for ROR. Yes, taxable for RNOR. Taxable for NR. Rahul, I have income deemed to be received in India. Taxable for ROR. NR. RNOR. Let's put names, no? Nane marandiruva. Rahul, I have income accruing or arising in India. ROR, yes. RNOR, yes. NR, yes. Rahul, deemed income receive or accruing or arising in India. ROR, yes. RNOR, yes. NR, yes. Okay, great. I have my income accruing or arising outside India, but it is from a business or profession set up in India. ROR, RNOR, NR. Very good. Please understand this. Please understand this. In exam, if they come and say that, Rahul, my income is accruing outside India, but the business is from India, RNOR, everything is taxable. NR Puerto Rico, if the question comes and says something is received in India, that will become taxable. Yes or no? Yes or no? Be careful. Yes. Then they're coming and saying my income is accruing or arising outside India from a business or profession controlled from outside India. ROR will say taxable. RNOR will say not taxable. It's from outside India. It's from outside India. NR will become not taxable. Then they're coming and saying, Rahul, my income is from other heads accruing or arising outside India. My ROR is taxable. RNOR is not taxable. NR is not taxable. Rahul, my income has been earned and received outside India. My income has been earned and received outside India, but later on remitted to India. Later on remitted to India. Now I am on remittance basis. ROR will also say not taxable. NR will also say not taxable. RNOR will also say not taxable. Why, Rahul? Because remittance Puerto Rico, it is never taxable. Remittance Puerto Rico, it is never taxable. I will check on accrual basis. On accrual basis, if it is taxed, I will tax it. If not, I will ignore it. If not, I will ignore it. Yes or no? Yes or no? This is what a scope of total income looks like. This is what a scope of total income looks like. In the scope of total income, we learned about 4 words. One is called as income received in India, deemed to receive in India, accruing or arising in India, deemed to accrue or arise in India. Income received in India, straightforward. You get the money in your India account, it is income received in India. Income accruing or arising in India is a straightforward case. Your business is in India, therefore it is accruing or arising in India. Income deemed to receive in India is all those cases which are covered under salaries. When we go to salaries, we'll discuss it. Last and the most important thing is called as income deemed to accrue or arise in India. Income deemed to accrue or arise in India, I told you we have to learn it in a head of income format. We learn it in a head of income format. In head of income comes your first income called as salaries. Income tax comes and says, boss, if you are receiving salaries for rendering services in India, then income is taxable in India. If you are getting salary for rendering services in India, income is taxable in India. I don't care where you receive it. I don't care how you receive it. Okay, if you are rendering services in India, it becomes taxable in India. No, Rahul, I am not rendering services in India. Then you are an Indian government employee. What are you? Indian government employee, which means you are working in an embassy. You are working in an embassy. If you are working in an embassy of India, which is outside India, which means you are receiving salary from Indian government working outside India, then also your income becomes taxable in India, because then I don't care. Then I don't care even if you are working outside India or where your money is coming from. Because the money is coming from government, it is taxable in India. It is taxable in India, with an exception where they come and say that, boss, any kind of allowances or perquisites will become exempt. Any kind of allowances or perquisite will become exempt, which means the only thing which will become taxable for you is your salary. The only thing which will become taxable for you is your salaries. Any allowance will become exempt, any perquisites will become exempt, nothing will be taxable for you. Is that clear? Yes. After you move from salaries, you have next thing called as HP. Income is coming and telling that if you have any income generating from a property which is situated in India, it is taxable in India. If you have any income generating from a property in India, it is taxable in India, which means HP should be in India. Then they are coming and saying you are not in HP, you are in PGBP. Income tax comes and says we will introduce a concept for you called as business connection. Nothing for you to read in business connection except for one thing, where they come and say you are an agent. Who are you? You are an agent. Income tax is coming and saying if I find you as an independent agent, then nothing is taxable. If I find you as a dependent agent, don't worry about your income. Non-resident income becomes taxable in India. What? Non-resident income becomes taxable in India if you are his dependent agent. If you are not into agency model, you have now something called a significant economic presence. Income tax is coming and saying that, boss, if you have a significant economic presence in India, how do you establish that significant economic presence? If you are having a revenue more than 2 crores from users in India, or you are doing any kind of survey, soliciting and all those things, and there your users are more than 3 lakhs. 2 crores or 3 lakhs is the condition. Satisfy any of these conditions, you will now establish a significant economic presence in India. Income tax comes and says if you establish a significant economic presence, also your income is taxable in India. But they have given you 5 exceptions. They are coming and saying if you are into any of these 5 exceptions, nothing is taxable for you in India. One is if your operations are outside India. Second, they are coming and saying if you have any kind of news and views from India transmitted outside India. Then you are coming and saying you are purchasing any kind of goods from India for export outside India. Next, I am coming and saying, Rahul, I have any kind of cinema shooting happening by a non-resident in India. Last time coming and saying, Rahul, if I am in a foreign company who is displaying diamonds, then also it's not taxable in India. Now please understand the last line talks about display, which means if you sell it is taxable, but if you sell outside India it is not taxable because it becomes an export. Clear, not clear? Everyone be careful about this. This is your PGBP. If it is not PGBP, then it is capital gains. Simply they're coming and saying, boss, if the capital asset was from India, then the income is taxable in India. If the capital asset was from India, which means the asset is also in India or the shares are from India, whatever case matters. It doesn't matter. Those incomes will also become taxable in India. And the last thing is your IFOS. Where they're coming and saying if you are receiving dividends from an Indian company, then it becomes taxable in India. If you are receiving gift from India in the form of money, not in the form of assets, in the form of money. If you are receiving any kind of money by a non-resident outside India, then also it becomes taxable in India because the money is coming from India. But beyond this stands 3 important things called as interest, royalty, FTS. Income tax comes and says that, boss, if you are receiving any of these 3, which is what? Interest, royalty or FTS, do not look from the perspective of who's getting the money, look from the perspective of who's paying the money. I am telling that, Rahul, the payment can happen by 3 people. 3 people, government, resident, non-resident. Rahul, if the payment is happening from the government, it is always taxable in India for the non-resident. Rahul, the money is coming from the resident. It is generally taxable in India for the non-resident, except if I come and clarify that the resident is going to use this loan or service for outside India. For outside India. If you are getting the money from a non-resident, think about it. I am paying as a non-resident, person receiving is also non-resident. Normally it will be not taxable. But if it is established that this non-resident is going to use the loan or the services in India, then it will become taxable in India. But please understand, for it to become taxable in India, it has to be generating income from business or profession in India, or generating income from other sources in India. But this generating income from other sources in India is not there for interest. It's not there for interest, which means a non-resident giving money to another non-resident, getting interest out of it. If this non-resident uses this loan for any purpose in India which is not a business purpose, it will still be not taxable. It will still be not taxable. A simple example if I have to give you, the example is there is a person giving money to another person. The other person is using the loan and buying shares in India. What is he doing? Buying shares in India. Because he's buying shares in India, he got something called as dividends. He got something called as dividends. Now this person is going to give him interest. Now both are non-residents. Is this income taxable? No. Because the money which he got, which is the dividends, is not an income from business. It is an income from other source. It is an income from other source. So therefore it will become not taxable in India. It will become non-taxable in India. Yes or no? Yes. Everyone? Yes. If I have to note down the example, quickly note it down. There is a person called as a non-resident, another non-resident, a non-resident with another non-resident. You are going to give this non-resident what? Loan. You are going to give this non-resident a loan. This non-resident is going to give this person interest. Now, I need to look at what is happening with the second non-resident. If this non-resident is using the money for business or profession in India, what for? Business or profession in India, or this person is using this money for other source in India, or this person is using it for other source in India. If I find out that the person is using for business or profession in India, I will come and say, taxable. If it is there, I will say not taxable. I will say not taxable. Now please understand, this taxable and not taxable is not for the right person. It is not for the right person, it is for the left person, because the person receiving the interest is the left person, which means left person will have to pay tax in India, provided what the right person does with the money. Provided what the right person does with the money. If the right person uses the money for business, left person will have to pay tax in India. If the right person uses the money for other sources, the left person will have to not pay tax in India. Will have to not pay tax in India. Yes, sir, everyone. Makes sense. Yes. One of the very famous questions from ICA exam perspective. Please be extremely careful about this. Please be extremely careful about this. Understand the business and profession part. Now, at the same time, if the same scenario was for royalty or FTS, if this same scenario was for royalty or FTS, then in that case, I will not care whether you are using it for business or for profession. This would have also become taxable. This would have also become taxable only if it was royalty or FTS. If it is interest, it is not taxable. If it is interest, it is not taxable. Yes, sir. Everyone? Yes. Any doubts? Can we go forward? Yes. Great. This marks the end of your chapter number